That what's going on right now, from our point of view at least, is that the higher interest rates and higher inflation are acting like taxes on the system. And we've been talking for a while about this, about consumption slowing down dramatically if you look at retail sales. And I'm talking about real retail sales. Take out the inflation and real consumption. We've seen a dramatic slowdown since October, and we are beginning to see inventories pile up. All of that is working out the way we expected it to. Our surprise is that many economists and strategists out there aren't putting two and two together. They're paying attention to other variables, which there is conflicting evidence, but they're paying attention to other variables that support their point of view. We've already made the assumption that the valuations are going to come down. We believe what's happening in Russia and the Ukraine right now is turbocharging the shock to high valuation stocks that began last February when we were all getting vaccinated, and hopes were that the economy would continue to gain momentum. And so we now believe that Russia and Ukraine have turbocharged that shock. Commodities, they're on fire. We believe this is a supply problem much more than a demand problem. I'm sure there's a scramble to build inventories of anything now, anything in the energy complex, any of the metals that come out of Russia, food out of the breadbasket of the Ukraine. Interestingly, the commodity price increases are in the face of the dollar increasing. The dollar increasing tends to put pressure on prices, but this supply problem and maybe inventory hoarding is overcoming that. The dollar is going up because it's a flight to safety currency, and we're also seeing other flights to safety. So the dollar's up about 2.5% since the end of January, when the Russia-Ukraine issues were becoming more obvious. And then the other two flights to safety we've seen, Bitcoin 6.1% and gold 8.3%. So the crypto networks are proving their worth as a neutral technology platform. We're seeing donations of both Bitcoin and Ether to the Ukraine. I think it's 50 million, if I'm not mistaken, in the last week. And we're also seeing Bitcoin as a currency hedge for Russian citizens who are watching the ruble get hammered here. And these are not the oligarchs. In fact, as we were discussing at our brainstorm today, there's not enough Bitcoin out there for the oligarchs to hedge, and they have been hedging for years anyway. This is for the average Russian citizen who actually is aghast, many of them, as we hear it, aghast at what's going on in Russia. Tesla is providing free supercharging. In Poland, Poland's taking in, of course, a lot of refugees. And of course, we know that longer term, electric vehicles are going to help with the demand destruction of oil. I think the prices alone will destroy a lot of demand for oil and accelerate the shift to electric vehicles. And especially, we believe robo-taxis will be electric, and they'll be on the road 50 to 60% of the day. So that acceleration away from oil will happen as we move into the autonomous realm. We're seeing a lot of talk about renewables, especially nuclear, to reduce dependence on Russia. Of course, solar and wind, but I think nuclear is becoming less of a negative, even to some environmentalists who have studied it a little bit more carefully. We're seeing, of course, the social platforms providing real-time updates and providing a glimpse into the horrors that are taking place there. And I think that has put a lot of pressure on financial institutions and others to boycott or stop doing business with Russia. It's terrible for the Russian citizens who do not want this invasion, but I think we've never seen the financial system used as such a weapon, and we'll see if it works. We also know about Starlink. I think the president of Ukraine reached out to Elon Musk and say, hey, we're being cut off out there. And of course, Elon sent Starlink to the rescue. So that's phenomenal. That's phenomenal that we can continue to communicate with these people. And again, everyone around the world can see the horror that Ukraine is experiencing. So while the public markets don't appreciate what's going on in the innovation world, in fact, quite the opposite, they have taken a sledgehammer to these stocks in the last year. The private markets certainly appreciate what innovation can do and will do to help solve the problems that have arisen from the coronavirus crisis, the supply chain problems, now Russia and the Ukraine. According to a study that Max Friedrich, one of our fintech analysts, has done using Crunchbase, the Crunchbase database, it looks like while innovation stocks in the public markets have dropped, certainly pure play innovation, those that are not in the indexes. Those in the indexes are the innovation stocks in the indexes tend to be a little more old world. We even see from Meta Platforms, formerly Facebook, that the once disruptor is being disrupted. But if you look at the non-benchmark innovation stocks, you'll see that they're down 60, 70%. So it's a replay of the COVID crisis. And as we said back then, innovation solves problems. And I'll say it again because it is true. What we're seeing the private world do is actually move into up rounds over the last 20 years. The last year, the average up round has been 20%. So down 60% in the public markets, up 20% in the private markets. And we think the private markets have gotten the plot and corroborate our point of view, and truth will win out. Just like this idea that innovation solves problems was a winning strategy coming out of the coronavirus, we believe it will be ever more so as our 5 platforms, DNA sequencing, adaptive robotics, energy storage, artificial intelligence, and blockchain technology all scale exponentially during the next 5 to 10 years.